Today I want to share something really cool with you. It's a report, one of my favorite reports that's published on Wall Street. It's called the Deutsche Bank Conviction List. This is something you can't just Google, you need to have access for this. And what Deutsche Bank does is every quarter, they go to their best analysts and ask for the best ideas for the next 12 months. Now, these are people that have been analyzing these stocks and industries for years. I've worked with many of those for years. I know them personally, and they are really good at picking the best ideas. So this quarter, the report contains 30 stocks, 30 names that should outperform the market over the next 12 months. Well, let's talk about it. Welcome back to the channel. I see that so far nobody really guessed which beach I was standing on when I was filming the last video published on this channel. So I'm going to leave the suspense going for a little longer. Hopefully somebody can recognize the beach where I filmed it. Today I'm obviously at home, still here, but filming this indoors. But let's get to this report here. So I want to show you a couple of snapshots just to establish the credibility of why this report is really good. So on this first snapshot here, you see the past performance over the last 4 quarters versus the S&P 500. So obviously this report is updated every quarter, and Deutsche Bank tracks the performance of the picks that are contained in this report. And you see in all of these quarters, except for the third quarter last year when this was really close, the picks in this report outperformed the wider S&P 500 by a significant margin. So typically these picks are really good. And in the second snapshot, you see the full list of the 30 stocks that are contained in this quarter's report. So I'm obviously not going to spend time and talk about the 30 stocks here. I don't think we have enough time here. I picked my favorite 5 stocks that I really like out of those 30. But you see the full details of all these stocks below the video. So if you have any questions, comments, want to know more about the rationale, why they are contained in this report, why you should be investing in these, leave a comment and we can talk about it in the comment section. All right, let's do this. The first stock on the report that I want to talk about is Snowflake, which Deutsche Bank has a target of $300 per share for. Now, if you remember back in September when the stock IPO'd, it more than doubled on the day of the IPO. But this is a stock that's really growing into its valuation. Now, Snowflake is at the sweet spot of 2 really important secular trends for the next decade, which is data-driven decision-making and cloud adoption. Now, when you think about cloud adoption, the cloud data warehousing market should triple over the next 4 years and reach somewhere around $33 billion by 2024. So this is a huge total addressable market that's coming up. Now, Snowflake, the expectation for them is that they will take more and more market share because they have 3 advantages. The first one is concurrency. Now, I really like this word concurrency. Concurrency simply means that multiple users can access the data warehouse at the same time without slowing performance, which typically is a big issue, and without creating version control issues. You know, which version is the last one that somebody works on. The second is ease of use. They have simply better automation than their competitors. And the third advantage they have is independence. They can run on the Amazon Web Services products, on Microsoft's Azure Cloud Service, and on the Google Cloud product. So they have this ability to be a multi-cloud product that runs independently on all of these platforms. Now remember the fourth quarter results, fourth quarter 2020, the revenues grew by 116%. So this is a high growth company that really is growing into its valuation. So the question is, how should you be trading this, right? If you remember, the IPO price was $120. On the day of the IPO, we were somewhere close to $300. Then we saw we were almost at $400 in December 2020, and then obviously the stock sold off over the last 3 months. The 2 reasons why it really sold off is they had this unusual 3-stage IPO lockup expiration period. You know, how the insiders can sell stocks, and that the market was affected by that. And also obviously interest rates rose, right? So all the tech stocks are affected, the high growth companies are affected when interest rates are rising because you're discounting the future cash flows by higher interest rates. But again, this is a huge trend. This whole cloud environment, the total addressable market is huge. And Deutsche and I personally believe as well that right now we're at a compelling entry point and just, where you could start building position in Snowflake in the low 200s. And since some of you are millennials and you're called snowflakes anyway, you might as well own it, right? The second company in this report that I want to talk about is Facebook, which Deutsche Bank has a target of $385 for. Now, anytime I watch CNBC and I see Mr. Wonderful on there from the Shark Tank, he talks about Facebook, how he invests in Facebook, and how all of his businesses use Facebook for advertising. And you see this really reflected in the growth and in the results of Facebook. The whole monetization of the messenger. Right now, Facebook has more than 1 million active shops on the platform. And more than 250 million people are engaging with these shops on a monthly basis. So this is a huge focus and a huge growth, especially as the economy reopens up in the second half of this year, and a huge focus for Mark Zuckerberg and the company. The CPM numbers are back at the pre-pandemic levels. So if you're not familiar with the CPM, with the acronym CPM, CPM simply stands for cost per 1,000 impressions. CPM is cost per mil, right? How much does it cost you as an advertiser to show your ads to 1,000 people? So that's what the CPM number measures. And the CPM numbers obviously completely plummeted a year ago when the economy shut down and businesses obviously shut down, everybody stopped advertising, and they are back at pre-pandemic levels right now. And they are expected to grow even more into the summer as the economy reopens. So again, how should you trade this, right? Facebook right now is at about $300 per share. The target is $385. You know, when you look at the valuation and the metrics of how Facebook is valued here, typically Facebook trades at a 21% premium to the wider S&P 500 index. So typically when you look at the valuation on a forward PE ratio, the stock Facebook is 21% higher versus the S&P 500. And right now there is absolutely no premium in the stock. They trade on par, on the same valuation to the wider index. So again, an attractive entry point level into a stock that we know is going to generate a ton of revenues as the economy reopens, and a chance to enter at a decent level. The third company I want to talk about is RINGCENTRAL, ticker RNG, which Deutsche Bank has a target of $450 per share. And right now the stock is at $320, so that's a 40% upside. Now, this is a company that not many people speak about in the press or in the financial press, but they compete in the same space as Zoom or Microsoft Teams. And by the way, I am an investor in Zoom and I use Zoom as a customer, but I think RINGCENTRAL really offers a great diversification in this whole investment theme. Now, they will be one of the top beneficiaries of this whole migration into cloud-based unified communications. Now let me explain what I mean by that. Right now, globally, there's about 500 million PBX licenses. PBX stands for Private Branch Exchange, which is effectively the license that your company that you work for allows you to have a phone on your desk, right? That's connected somewhere, you pick up the phone. That's kind of the old school way of communicating, which we haven't really done much of in the last 12 months. And only 3 or 4% out of those 500 million PBX licenses so far migrated into the cloud. So this is a huge market that will be, migrating into these new solutions over the next 3, 4, 5 years. And RINGCENTRAL is right in the middle of it. So when you think about, the potential for growth here, they have these amazing partnerships with, the major players in the industry, with Avaya. Avaya is the major brand, right? If you work in an office for a corporation, it's likely that you have seen an Avaya phone before. So they have partnerships with Avaya for 100 million of these licenses. With Atos, with Alcatel-Lucent, but also with British Telecom, with Vodafone, with AT&T. So nobody has better partnerships in this industry than RINGCENTRAL. So when you compare this to something like Microsoft Teams, which has about 115 million active users, they have about 180 million licenses in partnership with all of these companies. So a huge market for them, where RINGCENTRAL will be a major player in this whole migration and transformation to how we will communicate over the next 2, 5, 10 years as we all migrate to some kind of a work from anywhere solutions where old school phones on the desk will be completely irrelevant. So RINGCENTRAL again, DB has a price target of 450. It's at 320, so 40% upside. I think this is a great company to own if you're interested in this whole theme of cloud-based communications. A couple more companies from the report I want to mention here. So the next one is Visa, which Deutsche Bank has a target of $270 for. So right now we're about 220, so this is a 22% upside from current levels. But, I want to talk about Visa because I also put other companies in this whole investment theme together with Square, PayPal, MasterCard, all of these companies that really benefited throughout the pandemic from the transformation into, how we really transact, into the e-commerce, into digital, how we process transactions. a company like PayPal, for example, which is valued at 3 times what Goldman Sachs is valued at. But back to Visa. Visa is really well positioned here because as we reopen, as more countries get vaccinated and travel reopens, the whole cross-border travel is a huge part of Visa's business. Pre-pandemic levels, this was 25% of their business. And this cross-border travel business is 8 to 10 times more profitable than the typical old-school domestic business. So Visa is really well positioned to benefit from that as we obviously start living again, huge pent-up demand for traveling. Everybody's just raring to go somewhere, and Visa will be a huge beneficiary there. So again, 22% upside from current levels. I think this whole theme of digital payments, so again, Visa, MasterCard, Square, PayPal, all of these companies I think are worth investing in still because there's so much upside for them going forward. And finally, the last company here is LendingTree, ticker TREE. Deutsche Bank has a target price of $365, which is a 62% upside from current levels of about $225 or so. So again, like so many companies, this whole, the pandemic obviously accelerated the transition for consumers to everything online when it comes to managing their finances. They have a history of making acquisitions. They ended up 2020 with $170 million in cash. They also have $500 million in untapped revolvers, so a huge amount of firepower if they want to acquire somebody and ride this whole reopening theme. They typically guide lower and beat on the results, so watch out for the next set of results. But when you think about the business and just the rationale behind why Deutsche Bank is putting such a higher target on the stock here, when you think about 2020, LendingTree's business is really made of personal loans, small business loans, consumer credit cards. That whole thing went down 90%, right? And 2021, this whole, the last couple of months, the reopening theme that's really in front of us, ahead of us, is a completely different picture. And LendingTree is really well positioned to benefit from these tailwinds as the economy reopens. The GDP in the US is set to grow 8-9%, and LendingTree is really right in the middle here to benefit from that. So again, 62% upside for Deutsche Bank's target versus where the stock is trading today. All right, so that's it for the 5 names that I picked from the Deutsche Bank Conviction Report for the next 3 months. I'm really curious how these stocks will do. If you have any questions for any of those stocks that I didn't talk about, the full list is below the video, so bring it up in the comment section. We can talk about the rationale and the targets and the investment thesis there. Make sure you give a like to this video. That's going to help the channel. It's going to help the YouTube algorithm. Subscribe to the channel if you enjoy this type of content, and I'll see you in a few days.